Hello, I am Lisa J. Stocks. Thank you for tuning in. And let's get right into it. I'm going to talk a little bit about the psychology of investing. And I think my last few videos that I did, or all the videos that I did last week, were in line with my thought process on really wanting to touch on certain things to make sure that everyone has confidence in all of the different elements in order to be on track to um, invest. So, our emotions, our our backgrounds, there are so many things that are going to shape the way that we go about investing. And I don't want anyone to be held back from the opportunity of investing. So, um, there's many things that I went through, and I'm trying to share my journey so that you don't have any fear, regret. Um, you know that it's possible. If I can do it, I know that you can too. And so, take a look. I just want to pin a few things. I'm a little bit in a rush, but I am here. And let's so as I was saying, your the social influences. You might be around people that are more spenders. They're not thinking about saving. They might have had a bad experience with investing and now they're projecting that onto you. They want you to just be living in the moment. And you may have had your own bad experience personally, and now you regret a certain investment. You think that you have a fear of the market, or there's certain things that you just don't have a full understanding of, and they also could be holding you back from the power of investing. So, in my videos this week, I touched on different things, like I said. One was that Apple. Apple hit an all-time high multiple times recently. And SCHD is also up. It's one that's been up since the beginning of the year because it's not an investment that is it has a different mix. It doesn't have those tech stocks. It is considered a defensive investment, but it's built for dividends. It is a conservative investment. It's built for income. So it's not something that I want a huge amount of exposure to in my portfolio right now. But it really was able to thrive with what was going on with, you know, the impact of being in war times and some of those top 10 holdings in this fund. And it has a really good strict criteria of how long you've been paying out your dividends, and um, it's not going to have even an Apple, some of the tech names that are so familiar with us don't meet the criteria for this fund. And that's okay. There's a place for all different types of investments in everyone's portfolio. This is one I'll put more focus on later because I'm not in the place right now where I want to have a significant amount of my portfolio sitting in an investment like this because I'm not ready to use it for income. I want to make sure that my portfolio is growing. So right now, focus on growth. But for someone who wants to always see something in their portfolio that has that stability, having this would have given you that peace of mind during those first 3 months of the year. Because while the S&P and all of our Mag 7 stocks were down, this is one investment that we were hearing so much about because it was not. So, guys, thank you for tuning in. Feel free to drop any questions or comments in the chat. So, this is one that hit a 52-week high recently, and then Apple stock again. And what I was trying to really convey in my video when I was talking about this is that um, I don't want people to have the mindset, whether it's hitting an all-time high or the share price of an investment is high, that it's not for me. I have to go out and find a cheaper alternative. I have to find something that is up and coming. I have no more growth, in this particular investment. I need to go a different direction. If you're already holding it, you need to keep up on the forward guidance of what you're able to research about the company, and use more logical, use the technicals and the fundamentals in making your decision, not just saying I have to find a different stock in the same area because I feel that Amazon or Walmart or Costco, they've been around forever. They've had their run. You have to decide for yourself if you're willing to take on those companies, those investments that are less well known, that don't have that track record. And, everyone, personal finance, everything that every person's way of going about building their portfolio is going to be different. So you have to find the right fit for yourself. But on this chart right here, this is actually still, I have on here Apple, SCHD, as well as the S&P 500. So you can see what I mean when I was saying that at the beginning, the first quarter of the year, this is March 30th, we can see the yellow line at the top is SCHD. So it was significantly higher, thriving, and compared to what was going on with other big tech names. And now it's still doing pretty well, but Apple and SCHD have continued. Apple finally woke up after, a while now. They've had some good news catalysts, and so they are also doing very well. Finally, it's been just the last few weeks that my investment into Apple has been over 100% gain. And I have a few others, and that's also nice to see. But even with that, I'm not ready to cut any of the positions that I'm up over 100% out of my portfolio yet. I'm not one that I invest into companies that I keep on top of what's going on with them because I want to be able to hold them long term. I'm not a person who wants to constantly have to rebalance their portfolio. And so, guys, do you have any investments in your portfolio that you feel like it's time to cut it, or that you feel like you need to take profit, or shift it into something else that you think has a chance of a more accelerated growth, like your investment is starting to move a bit slowly? Okay, so let's see what Daryl is sharing here. I know me, and I invest in retirement accounts before brokerage accounts because I do not want to bring the money home and then rely on myself to invest. So you're saying that you concentrate on your retirement accounts because you know that you have less flexibility of tapping into it. Okay. So then another video that I did. Hello, Brittany. Thank you for tuning in. Another video that I did was about fractional shares and investing at highs. And I used a few examples, and I'm going to share two memory stock, like big tech names. And this is ASML. It was over $2,000 at one point. Let's see, how long ago was that? Let's go out to the year. Okay, so January 30th, 2026, it was $1,989. So to see it at $1,700 a share, it's actually come down. Now, this is an investment I used as an example in my video where I was talking about don't be intimidated by the share price. This is something else that I don't want us to be held back from investing. I don't want anything to hold you back from investing. So that's why I'm talking about these things. There was a time years ago, Google had a stock split. So now it's currently $346, a much more affordable number to many people, but still, even that, getting started with investing, you don't have to have $300. You don't have to have $1,700. When I started investing to Google, it was about $3,000 a share before the stock split, which just made it more accessible, not more accessible, because it's not even more accessible, because fractional shares existed before the stock split and after. It's just a psychological feeling that you get when you can see a lower share price on your investment. But the point is that if you see an investment, whether it's $1,000 to $3,000, don't think that you can't have this in your portfolio. Micron is another one. It's also come down. Let's see some highs recently. It was about $1,200, $1,300, and now it's down to 848. Still a significant share price. But what I'm trying to tell you is that I've been there before. I was investing into Tesla, Amazon, Google when they were $3,000. And all of those, it seemed like a few months after I started investing into them, they had a share split. But that was just coincidence. And I'm glad that I didn't wait because of the share price. And now, whether it's Costco, Micron, ASML, I'm using these just as examples, not anything that I'm suggesting. That nothing I ever say is a suggestion of what you should buy, hold, or sell. But I just thought that they were similar to investments that I wanted to get started with years ago. And it took me time to be able to build up. I would say when I started investing into Google when it was 3,000, and also Amazon when it was about 3,000, I didn't get to one full share before they had the stock split, but that doesn't matter. It's to me, you need to just focus on being invested no matter what the share price is. And I'm not saying invest into anything, invest into quality companies that have the fundamentals that are on track for continued growth. So I think I put a few different investments into another one of these charts. Let's see. No. No. Oh, this one. All right. So on this chart, I put Google, Apple, good investments that I'm sure everyone here in the chat is familiar with. But then I also put in AMC Entertainment, the movie theater, and Chargeport Holdings, which is it's chargers for electric vehicles. And these are investments that are on the over the last 5 years. AMC and ChargePoint are down about 98%. Google is up 160%, and then Apple is up about 125%. So I'm just showing you the extremes of what investing can look like, because, like I said, I want everyone to know that there is an investment out there. There is an investment strategy that is right for you. I don't want you to be held back. I've had AMC and ChargePoint in my portfolio years ago. These things, you could have made money at the time because but they were trade status. They are not investment status. They are not things that you can see. They are not things that you can hold on to for 5 years without worry, without having to constantly watch like a hawk and be able to know when to cut them from your portfolio. So another one that comes to mind is Jaguar Health. So these are investments that you could have made a significant amount of money. I'm sure that you may have heard years ago about people making huge amounts with AMC, with GameStop, with some of these companies that were thriving at the time. Thank you so much, Keenan. Appreciate you stopping by and for that super chat. Let me see.
Thank you so much. We do greatly appreciate it.
All right. So I appreciate that so much. Thank you for tuning in also. So when you see a dip on a company, I don't want you to just jump in on any investment and think, oh, it's going to recover, it's going to turn around, it's going to go up. That is not the case. And so you have to put in the work to have an understanding of what you have in your portfolio. And funds can help you to give stability to what could be going on when it comes to your investing account. But even with that, uh, you still need to be mindful and choose the right one, because when it comes to certain investments like now, there's thousands of ETFs and and mutual funds that have been created over a while now, since the 80s when they first got developed. But the point is that there are they're all created differently. They all have different expense ratios. Some are very sector specific. Some are going to be moving too slow, and some are going to be moving very fast. And so you need to have some basic core investments in there if you want to have that type of stability in your portfolio. Now, the S&P 500 or a total US stock market investment, they can have those type of swings too, but those are definitely investments that have a large amount of companies. You can definitely find one with a low expense ratio, but they are investments that have a long track record that you can reflect back on and see how it moves during war times, during, election times, during different situations, and be able to have that confidence. Now, when you get into more sector specific investments, like we're seeing now with memory stocks or, a healthcare ETF, something very specific, then you're still betting on just that one sector. So the impact of fluctuations when it comes to the market is going to be a bit more substantial. So you have to be ready for that and make the right choice for your portfolio. So, but I'm sharing these things because I don't, if in the past you had a bad experience with an AMC, a charge point, some pharmaceutical company that didn't work out, realize now that, don't let that hold you back. Don't let that stop you or slow you down from investing, because there are definitely investments out there that will have you on track for continued growth. It may not be a perfect, steady, quarter after quarter of your portfolio going up, but if you are a person that definitely has time on your side, you shouldn't be thinking about investing in those short terms anyways. You should be ready to have a substantial amount of your portfolio in a place where you're allowing it to build and grow for year after year, decade after decade, getting you ready for those retirement days. So I'm going to take a second and look at the chat for a minute. Thank you guys for everyone who's come in so far and chatted. Okay, so Michael Anthony is sharing some tickers, which I will come back to. Lisa, I was at AMC IMAX yesterday. Watched the movie The Odyssey, 3 hour. The theater was packed. Yeah, poppin' fresh. You may have been sitting in a packed theater, but AMC stock is nothing that I want to have in my portfolio. But yes, you spend a lot of money at the theaters, but it's not a good investment. Hey, Chocolate Drop, how are you? Now, Chocolate Chocolate Drop. Speaking of Chocolate Drop, I know in the past she shared a few positions that she had in her portfolio, and like I'm always saying, if you're gonna incorporate individual stocks into your portfolio, you have to be ready to do research. But and people have shared with me um, individual stocks that they had, just randomly bought and had in their portfolio. I was not concerned as much as I would be on some others when they say that they have Apple, Amazon, Nvidia, those type of things. Those are companies that you could have added to your portfolio 5 years ago, and for some reason, if you didn't look, you'd be just fine today. But there are many investments out there that is not the story. That you have to have an understanding and be ready to keep on top of those fundamentals and potentially even put on a stop loss so that they can be cut from your portfolio so that you're never stuck diamond handing accidentally, as I say, something in your portfolio that has gone down like these investments, AMC and ChargePoint, and really have, if anything, who knows if there'll ever be a time when they turn around. It's not something that obviously you don't want your investment to drop by 98%. No one would want that, but even if it's a small amount left, it's something you just need to cut from your portfolio, and then be mindful going forward and have your investments into the right things. Realize, have a clear distinction when you add something to your portfolio. Is it a trade or is it an investment? And when I say you may feel like it's and you want it to be an investment, but don't don't just go by your wants. You have to have some concrete proof in order to just sit back and allow it to be in your portfolio in that way. So it is 2026. There are so many different elements to help us, to protect us. So over here, I don't use that expression of invest what you're willing to lose, because when it comes to my portfolio, I'm not willing to lose anything. My goal here is to make money. And so I don't really care for that expression. There are so many different ways in order to protect your investment, making sure that you are in funds that are giving you exposure to hundreds, even thousands of investments in that one investment choice. That is one way. If you are going to have individual stocks and you're unsure of the future growth and all of the fundamentals and technicals when it comes to it, in your app, in your investing app, you can put on a stop loss so that that investment can be cut from your portfolio if it drops by a certain dollar amount, percentage, whatever you indicate in your portfolio. Now, I have really right now, there's only probably one or two things that I would keep up with having a stop loss on in my portfolio. I don't use that feature for my Mag 7 stocks. We went through a rough period at the beginning of this year, like I was showing you here with showing the S&P as well as Apple and SCHD. All of the Mag 7, I think except for one, were down double digits during that first 3 months of 2026. Those are quality companies. They are going to recover. Those are not things that I am willing to sell and then have to get back into reinvesting because of a 10-15% drop. That does not happen that frequently, but we have to be ready for that. And another thing that allows me to have patience for those rough times of seeing my portfolio going down is that I know that I'm a long-term investor. I'm not trying to tap into these investments right now. And so I'm able to give it time to recover and make sure that I'm on track with my planning. So So these are some of the different elements that I was touching on in my recent videos. Like I said, your investment is at an all-time high. Your share price of a certain investment that you're interested in has a high share price. And I shared examples, and I can show them here if anyone is interested. But I'm telling you, I will invest $5, $10, $20. I showed my investments that I made over time on my journey into building up my few shares, usually about 20, 25 shares of companies that have a more of a modest share price now. But it's not, to me, it's not about being able to invest huge lump sums. It's about long-term consistency is what really can have you on track to have whatever company you want to have exposure to in your portfolio. Okay, so I'm going to take another break, station break first, and then I'm going to go back to the chat. But if you haven't already, make sure, if you haven't already and you are enjoying this type of conversation, this is what we talk about over here. It's investing, budgeting, saving, credit cards, being responsible with your money and making every stride to make your money grow. So consider subscribing and consider becoming a channel member. There are lots of ways to support the channel, so check them out. You'll see them in the chat right now, as well as always in the description of my videos. So these pullbacks are overrated. We need the market to keep going up, even if it's at a slow pace. It's out of our control, David. I think we would all say there's no need for pullbacks. Steady continued growth going up, but it doesn't work like that. And David, I know you're a person that takes advantage of the opportunity, so it gives you time to go shopping and building up your position. Do you adjust your stop loss annually as the stock or ETF value increases? No, I do not have a stop loss on a majority of my stocks and ETFs. I do not. And the stop loss, I think they only last about 3 months. So if I add something into my portfolio, I have to stay on top of updating it so that it stays on. But it's a very rare thing. I'm telling you, when it comes to Apple, Amazon, Nvidia, even Meta, Microsoft, AMD, Taiwan Semi, all those different companies, I don't have a stop loss on them. I'm going to right now, for now, these are all quality long-term investments when it comes to my portfolio. And so I'm willing to take on the fluctuations, whatever it may be, even if it is a time period when the semiconductor area or a particular area is being heavily impacted. And I've seen it happen last year, this year with Liberation Day, with being in war times. I've seen it and I've been going through it, and I've also seen the recovery, having several positions in my portfolio now over 100% gains, and they're not investments that I've been investing into for a very long time. That's right, Michael. We lost 2 American soldiers. Okay. Let me go up and see what conversation was going on. Okay, I see there's some talk about Iran and the drones and some different things going on. Okay, high oil and tech, for me, a bad sector to the downside, that we're very overbought. Okay. Thank you, Daryl, for chatting. Yes, who is doing fractional share investing in the chat? So Rooster, are you still here? You said you had the chance to buy Bitcoin in 2013 and you're kicking yourself now. I recently saw someone, a fellow YouTuber. I won't name names, but they sold all of their Bitcoin investment out of their portfolio at a loss. It was not the right fit for them. Now, I do invest into um I do invest into crypto. I just have a few positions, including Bitcoin. Then I have FBTC over at Fidelity. I have XRP. I have Ethereum. I have some Shiba Inu, and some of those smaller coins. But it's not a significant portion of my portfolio overall. And I'm definitely not going to be cutting any from my portfolio. I know the cycles may take years. I'm ready for it. I've invested an amount that I'm comfortable leaving invested for a while until it turns around. Okay. Um, let's see. I'm guessing this ticker was shared as one as something in line with what I was saying about ChargePoint and AMC, an investment that over a 5-year time frame has not been able to reap any rewards and any gains, if I got that ticker correct. Hello, Vincent. Thank you for that super chat and for tuning in. I appreciate your support and for being a channel member.
Thank you so much. We do greatly appreciate it.
Okay, so that investment that I put in here, not that one, this one. So you're saying that the forward, the PFE for the same price for the past 10 years or longer, but the dividend payment still made lots of cash. Yeah, I'm not about holding any investment where I'm getting zero growth but steady dividends. I don't chase dividend yield. No, no, no. All right. So, guys, if you have any comments or questions, or if there's anything that I missed that you want to share again, feel free to do that in the chat. Do I think Apple stock is up because of the new Apple Ultra Fold rumored to be announced this September during the Apple events? I think Apple just suddenly had a few good news catalysts going for it, and that could be one of them. But um, there's several. I didn't pull up any recent articles on that, but we can take a look at that. I don't know why my target didn't go up. Maybe it's because it's made on a different side. So we talked a little bit about SCHD, Apple, VOO. And yeah, touched on share splits. I think most of you guys already understand what share splits are and that they don't. I'm glad I didn't wait for share splits when it came to Google and those different companies. There's no reason to wait. And as someone was talking about Bitcoin in the chat, that's another one that I use as an example that I wanted to have Bitcoin in my portfolio at a time when Bitcoin was probably 50 to 60,000 per, so that's another one that I have to say, okay, Lisa, you want Bitcoin, you're just going to have to invest $20, $10, whatever. But I was doing the same with those other Mag 7 names. Okay. I'm pulling up my community page so we can take a look at some of my recent poll questions. Oh, thank you, Blessed Life, for being a channel member for 22 months. I appreciate your support. Thank you for sharing that milestone with everyone. Good afternoon, Fast Eddie. Noel, Kevin, thank you everyone that's tuning in so far. Let me look back. Lisa and the gang, is there anything we should be loading up on right now? Two positions that individual stocks that I've been working on are Meta and Microsoft. How about you, Noel? What are you working on? Some of the names that I shared today, like Micron and ASML, I do not hold those in my portfolio. Because I've been focusing on building up my investment into can't remember the ticker. What is my semiconductor? SMH. SMH is my semiconductor ETF. But I'm trying not to continue adding so many individual stocks because I already have NVIDIA, AMD, Taiwan Semi, a few. So I'm trying to just focus on an ETF for additional exposure in that area. All right. So I put up a question about the stock split. The question is, the question, when a stock undergoes a 10-for-1 split, what happens to your investment value immediately after the split? And the correct answer is it stays exactly the same. But some other things, other options I put in here, it increases by 10%, it decreases by 10%, and it depends on the company's earnings. So it's just a matter of the company deciding that they want their share price to be reflected in a different way. And I use the example of whether you think of it as a pizza before it's sliced up, a cake before it's sliced up, or a $100 bill versus getting five $20 bills. It's all the same. It's just a matter of how it's presented to you. SMH is your wife's initial. So yeah, sometimes I put it in the chat before and someone thought that I was saying shaking my head. So Daryl said that's one that he's working on is SMH. Okay. CrowdStrike. Yeah, I don't have CrowdStrike in my portfolio, but I think they were having a 4-for-1 split recently. I did mention it in a recent video a couple weeks ago. Okay, I don't see any questions that I missed. Yes, I believe SMH is going to be down right now because the semiconductors and memory stocks. Let's go to the month. Yeah, it's down 16, nearly 17% this month. But let's go out to the year. It's up 91% this year. So basically I'm okay. 16% in a month is a significant drop, but if you didn't, this is the benefit of staying invested and allowing your positions to get deeper in profit, especially that is, I just want to make sure that I'm clear for people that are newer. It doesn't work like that for every investment. Just like that's why I wanted to throw the AMC and the charge point in there. 5 years of it just going down, down, down. But this is a basket of stocks. Semiconductor is an area that I wanted to have additional exposure to when it comes to my portfolio. And so I'm giving this a position, time to grow. And it's an ETF. It's not an individual company like the two that I shared. So it's going to rebalance. It's going to keep us on track to have the best companies in that top 10. It's going to adjust by weighting and different things like that. Now these ETFs, they have different schedules on how they rebalance. Some are quarterly. I know my SPMO is twice per year, but however it is, you have to do your research, have an understanding of the methodology of how they go about choosing what's going to be in the fund, and just, make sure that it's in line with what your risk tolerance and long-term goals are. Everything is not I always say that investing, it's not a one size fit all thing. You know, I share what I'm invested into, but you got to realize my journey is not yours. And you have to, there may be something that I share that is the right fit for both of us. I think an S&P 500, a total US stock market investment, is the right fit for everyone. But when we get into SMH or SPMO, they might not be the way that you want to go about investing. Your risk tolerance, the expense ratio, whatever it is, might not be the fit for you. And I am heavily into tech when it comes to my investments. So let me see. I think I saw a question. We know every year the stock market goes down in September. Do you start saving extra cash to buy? Why the stock market is down in September? If not, why? I can't say that I save specifically for September. And I think right now with this administration and the things that are going on, I think I just like to have a bit of cash on time at all times for continued investing as well as trading. But I can't say that I specifically plan extra for September. No. Why? Just because I just have not ever taken it to that level of planning when it comes to being on track for continued investing. So let's pull up DRAM. I have not added DRAM, ticker symbol DRAM, the Round Hill Memory ETF, to my portfolio. It's a very new ETF. Year to date, it's up 89.91%. But it's actually in a price range that's, well, what held me back the day that I was considering getting started with my DRAM investment is that I had available cash to do it, and I was going to put it into a Fidelity brokerage account that I have that has all ETFs in it. But Fidelity was hitting us with that fee for investing into this. They don't have they have a bit of a conflicts going on with certain brokerages, certain companies, and Round Hill is one of them. So they're charging an additional fee for investing into it. But yes, just like what we looked at with SMH, Round Hill Memory ETF is down nearly 35% in the last month. So if it is something that you want to have exposure to, I posted this on my community wall. The price has come down a bit since I did that video, but I was definitely saying like in the 50s, as low as $45. If this is something that you want to add to your portfolio, have your alert set, have your limit order set so that if it does drop, but definitely even now below $55 is a place that I would add it if this is something that you are working on having a more significant position in. This one has a higher expense ratio at 0.65%. So it's going to cost you more to be holding on to it long term. But like I said, everything is not the fit for everyone's portfolio. Have an understanding of what you're invested into. I would pay Lisa to monitor the rebalancing of my ETF. Okay. Daryl, what else is going on in this chat? And thank you, Daryl, for being a mod and greeting everyone and keeping an eye on everything for me. What percentage of cash should I have so that I'm ready to invest to take advantage of stock market crash? So I can't say how much cash you should have. Someone asked me recently, I think I was sharing some portfolio detail and I was sharing it by percentage. I think I was saying I had 5 to 7% available to me for trading. And they were like, Lisa, is that enough? But I had to then share what that 5 to 7% was in dollars because they didn't understand. So I cannot tell anyone how much they should have on hand for investing, trading, anything like that, because it all depends on your budget. I don't like to hear when people are keeping too much cash on hand because it's not working for you if you're holding on to it. I really encourage people when I work with them on building their portfolios to I always get the question of, you know, lump sum investing versus dollar cost averaging. And what I can tell when someone asks me about it at times that they don't want to jump in with the lump sum. So I try to give them a tight range, even if it's 6 weeks or, you know, depending on how much money they have to invest, maybe a little bit longer, like even a quarter, but to get it invested because holding on, time in the market beats timing the market. And sometimes just holding on to cash for months, trying to find that perfect time is not the plan. So, Daryl, I cannot share how much you should have. Uh, I would say push yourself, but everyone's budget is different. For me, right now, I'm keeping about $4,000 to $5,000 available for my options trading because I like to buy leap options, and those contracts are a little bit more pricey. So I have to evaluate my budget, my risk tolerance, the things that I want to do, and work based on what my budget is. Lisa, do you put out alerts when buying calls or puts? No, Noel, I do not put out alerts because I am often following my mentor's guidance do when I do my options trading. So I do not teach options trading, and so no, I do not put out alerts. And I would not. I if I'm following someone else's guidance, I then cannot post it ahead of time. If you understand what I mean. Uh, but I'm definitely trying to put more effort into understanding all of the elements uh, because I want to be able to use their charting in order to choose my own contracts. And I'm getting better at that. But I have to make sure that I'm doing it in a way that I'm often successful. When it comes to trading, just like with investing into more speculative stocks, I'm using my stop loss. I'm not letting, my investment go down to zero because that is not my strategy here. My strategy is to make money. So your daughter wants me to pick her first investment. So my daughter wants me to pick her first investment. Any suggestions? She bought me $50 of her graduation money. Okay. So, Chocolate Drop, I hope you're still here. If not, I hope you reach out again. But first, decide on, I don't know if you guys are there yet, but decide on what type of account she's going to have, whether it's going to be an account that she can potentially tap into before retirement, or is this for after 59 and a half? Have an understanding of what type of account that you're going to put it into. And I would not necessarily get her started off with a stock. I would choose a fund for her, maybe VTI, which is a total US stock market fund, or SPMO, which is a momentum ETF. She is young. That $50, maybe $40 into the most basic, and then $10 into other things. SPMO, which is another fund, or maybe $5 into Apple stock, or something that she might use, Amazon, nothing too significant, but I would definitely put a lot of work into building up her foundational investment, or show her a video, or I can give you a little bit of detail on ETFs, and she might be able to just stick with that for now. But if she has dreams of incorporating a stock, high level, I don't think you would go wrong. I'm not saying it's a buy and hold forever when it comes to any individual stocks, but if she wants to go with a Meta, a Microsoft, an Apple, something like that. But like I said, it's not forever. I'm not saying that there's nothing in the future that could happen. Index funds are best for any beginner. Yes, most definitely. Most definitely. You're here. Okay, Chocolate Drop. So what do you think? What are you thinking after what I just shared, what do you think you're going to do as far as an investment for her? When I say a total stock market investment, you're getting exposure to over 3,000 different companies in that one investment. S&P 500, you're getting exposure to the top 500 companies. So you can paint it to her like that. You don't have to pick just one company. You don't have to take your $50 and then decide how much am I going to buy Apple, Microsoft, Meta, which is, Facebook and Instagram, and something that I'm sure that she uses on a daily basis. I'm not big on saying, invest in what you know and use, but there are a few incidents when it comes to my portfolio where that just happens. I am definitely taking notes. Okay, okay. So come back and give us an update when she invests and let us know what you guys decide on. Is it a retirement account or is it a taxable account? Excellent answer to Chocolate Drop. I would not have thought of a choice between retirement and brokerage account. Yes, even though she's young, I know Chocolate Drop's daughter, she's probably at the most 19, probably even younger. So I know she is a young lady that is just getting started. I'm definitely not against having taxable brokerage accounts because um, I really encourage people to have both. Have a taxable brokerage account, but definitely focus on retirement. Retirement first before investing in the taxable account, before investing for your kids, all those different things. Because, we have to be ready to take care of our older selves. I think it's very important. As well as if we're working, that's where you potentially can get an employer match and different things like that. So take advantage. But at the same time, at some point in life, we're not going to be able to go to work anymore. We're not going to be able to do what we're able to do when we're young. So we need to take care of our older selves. Social Security and it's not going to be enough. So we need to be building on our portfolio so that we can be ready to supplement whatever else we may have coming in when the time comes. So for many years, I was only focused on my 401k through my job. That was the extent of my investing. But all the different things that I was touching on at the beginning of the show, and I said that I've shared in my recent videos, these are things that I want people to be aware of because as we, whether it's because you want to, like you want to be on a journey, just like it's built into Daryl's name here. Where is Daryl? Where is Daryl's name? Daryl, FIRE, FIRE, financial independence, retire early. That is what that stands for. And so I did not have this mindset when I was younger of, you know, work hard, invest hard when you are in your 20s, 30s, and 40s. And then maybe by the time you're 50, you could be at the place where you're work optional. I did not have that mindset. I wish I did. And I hope that young people like Chocolate Drop's daughter can have that opportunity of putting in the work much earlier on and realizing that putting your money to work is going to benefit you. I know you want to have fun when you're 20, but putting in the work as early as possible is going to have you on track for an easier life in the future. And hopefully you can do both by making sure that you're not living above your means, not creating situations where all of your money is going into making sure to maintain the rent and the car note and all of those different things. Try to keep things as low as possible so that you can prioritize your saving and investing. So she just turned 18 on Thursday. Yeah, I knew. I said 19. I thought maybe I said at the most 19, but I know that Chocolate Drop's daughter was a young lady just finishing up high school, I believe. But she's been working her part-time job and just like my daughter. Um, but I love hearing that she brung $50 to mom and said, help me to, decide on an investment. That is beautiful. Yes, invest money in retirement account in 20s and 30s. Yes, Chili. Tell them, Chili. Fast Eddie, she's going to college next month. She doesn't have a taxable job yet. Okay. You like that idea? You like the idea at mid for work optional? Okay. But it's not just going to happen. It takes work. It takes the work earlier on in order to have yourself on track for that. Long as she has income, she can put it into a Roth, but she has to have earned income. Yes. What about 50-50 split between retirement and brokerage account? Yeah, I mean that's your personal preference on how much you want to do in both, but I think nowadays the opportunity of making your money grow through investing and then potentially not even necessarily selling your shares, but exploring options of taking a loan against your shares. There are different ways of going about it, but I think that lots of people nowadays, I don't want people just to hear about the Robin Hoods and the Moomoos and think that's the extent of investing that I do or that I'm encouraging over here. I have I brung all of my 401ks over to Fidelity from previous jobs, and that's where I've been managing them at. But um, my retirement accounts have been a top priority, and that's where I got started investing. It's only been in recent years that I've incorporated a UTMA account for my daughter, Fidelity Youth account, as well as taxable brokerage accounts where I can invest and trade in order to build my money in that way. But I think it's if you and also you have to know yourself. I've heard too many stories that have disappointed me where someone has tapped into their retirement account because of so many different factors that we have to be ready for when it comes to um, emergency funds and things like that. I thankfully a lot of the wealth that I've been able to build over these years has been because I've struggled through. I was in debt at times, but I did not tap into my retirement accounts, and I've done all the repairs. I've had all of the issues. I've had a car accident, car totaled. I've done every type of house repair and car repair that I can think of, you know. I've even had, and things that are extensive. Like I've had to have them come in with the huge backhoe thing and dig up the whole front lawn and replace underground sewer pipe to something as basic as, you know, the windows, the siding, fencing, all those different things. I know conditioning, heating, those are they can be expensive, substantial fixes. And I'm talking about this because these are the type of things that I've heard people say that they tapped into their retirement account because the furnace broke down, because the AC broke down, you know? And so I want your retirement account to remain invested until retirement, and not you're not taking out any loans, any hardships against it, so that it can continue to build and grow. So I don't talk about it that much over here, but um, don't forget, don't forget. I want you to have established strong credit and a substantial amount of savings, um, depending on what your budget is and what your needs are. There are some people that 3 months is a comfortable buffer for them, but others, how many people are responsible, how many people you're responsible for caring for, and how many incomes are coming into your household, things like that. How long does it take you to find your next role if there is interruption with it? I've been a person that's had several interruptions as far as getting laid off, but you may be in an industry where you haven't had that. You've been able to have the longevity of being able to stick with a job for a substantial amount of time. I offer to match your granddaughter's retirement you made an offer to match your granddaughter's retirement investments. That is a lovely gesture. I hope she takes you up on it, and I hope she is responsible on building up her portfolio. Okay. Um, Guys, everyone, thank you for tuning in. If I did not say hello or acknowledge, or if I missed anything, please accept my apologies. I'm definitely taking notes. Okay. Um, all right, I'm just taking a quick look back. Thank you. I now have a goal. I will go with 1% of my net worth. Okay. Okay. I'm not sure. Uh, got it. In your paid memberships. Let's see. Hello, Rodney. I'm sorry. I know you checked in a while ago, but thank you for tuning in. All right, so I'm gonna go back down to the bottom. Great live, my lady. I love the Prince shirt. Oh, you like my Prince shirt? Thank you. Glad I caught it live. Thought she was AI. You thought I was AI? Are you really saying you thought I was AI? Tell her every dollar she invested, 18 will turn into 88 by the time she's 85. By the time, not 85, by the time she's 62 to 65. Okay, okay. Yes, chocolate drop. I don't know if you've ever seen me share if you're still here, Chocolate Drop, I don't know if you've ever seen me share the investment calculator, but that might be something fun to do with her. Fun according to me. Uh, just to show her how her money can grow and how you guys can make goals for yourself um, on building up your portfolio. So let's see, throwing in a quick scenario here of she's starting off with $50 after 5 years at a 10% rate of return, and she's going to be adding $25 a month. So let's see what this would turn into. And this is just a quick hypothetical scenario. So by putting in $1,500, this would turn into nearly $2,000. So $444 would just be interest. So you and her can sit down, figure out what are the real numbers that she might be able to work on, and then um, continue revising this. And I use 10% because that's just an average rate of return when it comes to uh, the S&P 500, for example. But, depending on what you guys invest into, you guys can have an idea in time of the rate of return that her portfolio is gaining. And she's young, so I don't want to necessarily tell you something too aggressive, but she is definitely not someone who needs to be um, modest because she has time on her side when it comes to building her portfolio. But yeah, let me know if you want to share more on what brokerage company she's going with. Another investment, if technology is a direction that she or you may be interested in, VGT comes to mind because it also has a low expense ratio. But let's compare it to VOO, which is the S&P 500. So you see, this is year to date, but let's go out a little further. Let's go out 1 year. You see that VGT has a higher performance than just being directly into the S&P 500. So whatever amount that she's able to invest, you might want to do a split between the most basic type of investment like a VOO or VTI. Oh, I'm sorry, guys. I'm not even showing you what I'm sharing here. But I was sharing here VGT and S and VOO as an example. So over the last year, VGT is up 31.80%, while the S&P is up 18.21%. And again, not picking one individual stock. It's a basket of stocks, but there are many out there that you can definitely either choose one to stick with for a while or choose two, if you want to mix it up a bit. Okay, so Chocolate Drop says she will keep us updated on the investment. Thank you. All right. Okay, let me just check my. All right, so guys, I hope I see you back next Sunday at 3 p.m. Eastern Standard Time. And I hope you enjoyed this live. If you're not already, subscribe, like, hit that notification bell. When you watch my videos throughout the week, make sure to leave me some comments, uh, hype, do all the things. Those are all ways that you can always be supporting the channel. And if you're ever looking for any detail on anything, like Chocolate Drop is asking about investments, investment choices, just feel free to leave me a comment or question on any of my video shorts, community wall, just so that it can get to me, and I can definitely try to direct you to a video in line with what you're asking about. Uh, So Flash is saying they really thought I was AI. Okay. Well, you're really seeing the real me today. This is not AI Lisa. Lisa doesn't even have her braids today. Okay. Tell her. All right. So I'm going to wrap it up. Make sure to keep the comments coming. Don't forget to hype the videos, comment, share, do all of the things if there's someone that you think could benefit from what we're talking about over here. And I will see you guys soon.
And to investments, she make a lot on YouTube. Lisa J Stocks. Lisa J Stocks, that's the channel. Hey. If you wanna make some money, visit Lisa J Stocks. Yeah. You will make a lot. If you wanna make some money, visit Lisa J Stocks. Okay. She'll make it pop. If you wanna make some money, visit Lisa J Stocks. Yeah. You will make a lot. If you wanna make some money, visit Lisa J Stocks. Hey, she'll make it pop. Lisa J